Hello, and welcome to today's podcast, where we dive into a subject that's not only crucial, but could potentially save you thousands of dollars. Timely reporting for bank fraud recovery. We often hear about bank fraud, but understanding the nuances of reporting it promptly can make a world of difference. When I first started exploring the labyrinth of fraud recovery, I wish there was a straightforward guide to help navigate these waters. After years of teaching and working with over 500 professionals, I'm excited to share insights that are both practical and impactful. Here's the thing. A lot of people don't realize that the timing of your fraud report can be the difference between losing $50 and losing $50,000. Yes, it's that dramatic. The landscape of bank fraud is continuously evolving. Fraudsters today are more sophisticated than ever, using high-tech methods to exploit any vulnerability they find. Just take a look at the Federal Trade Commission's report. In 2022 alone, consumers reported losing over $8.8 billion to fraud. Bank transfers and payment fraud were a significant part of these losses. In this rapidly changing environment, it's crucial to understand the legal recourse available to victims, and timely reporting plays a pivotal role. Modern fraudsters act with precision, often moving the stolen funds through multiple accounts within hours. That's why timely reporting isn't just a procedural step. It's a critical strategy to minimize financial and legal consequences. The opportunity to freeze accounts and trace funds shrinks alarmingly with every passing hour. Let's dive into understanding consumer liability under U.S. law, which is an essential part of this puzzle. Regulation E under U.S. federal law, established by the Federal Reserve Board, sets a cap on a consumer's liability for unauthorized electronic transfers based on how quickly they report the fraud. Here's the thing. If you report within 2 business days, your liability is capped at $50. This is the golden window where your financial exposure is minimal. Report after 2 days, but before 60 days, your liability can shoot up to $500. Still manageable, but the stakes have increased. And if you report beyond 60 days, your liability becomes unlimited, potentially leading to a total loss of funds involved. This scenario often results in the loss of one's entire account balance with little recourse. This creates a powerful incentive for immediate reporting that goes beyond mere financial protection. The pattern is clear. The sooner you report the fraud, the better your chances of minimizing financial loss and avoiding legal complications. A small tip: set up account alerts for any transaction over $1. This way, you can catch unauthorized activity in hours, not days. Now, you might be wondering about the legal and procedural advantages of prompt reporting. Here's where it gets interesting. Reporting fraud quickly doesn't just help in freezing accounts or reversing transactions. It also aids law enforcement tremendously. The FBI's Internet Crime Complaint Center processes over 800,000 complaints each year. Cases with immediate reporting have significantly higher resolution rates because they can act faster and more effectively. This proactive approach could be the difference between recovery and permanent loss. When you report within the first 24 hours, banks can implement what's known as a hot stop on transactions. This carries more legal weight than typical disputes filed later. Banks have specialized fraud units operating on rapid response protocols, but their effectiveness diminishes the longer you wait. Prompt reporting also improves your legal standing by triggering enhanced documentation and provisional credit procedures. Banks are required to provide provisional credit within 10 business days for reported unauthorized transactions. A protection that weakens with delayed reporting. Let's move on to some advanced insights and pro tips from real-world cases. The Wells Fargo account fraud scandal of 2016, which impacted over 3.5 million customer accounts, highlighted the importance of internal monitoring and acting swiftly. Customers who noticed irregularities early and reported them had far better outcomes than those who discovered the issues later on. Here's an insider tip. Banks maintain a fraud velocity score for each customer. This algorithm keeps track of how quickly you report suspicious activity. Customers with consistently fast reporting times often receive priority handling and more favorable dispute resolutions. Incorporating advanced fraud detection technologies like behavioral biometrics and real-time transaction monitoring can significantly bolster your defenses. These systems analyze your typical banking patterns and quickly flag any deviations. However, while technology is a powerful tool, human vigilance is irreplaceable. I recommend setting up a simple daily 5-minute routine to review your accounts. This small habit has saved millions for the professionals I've worked with. Another game changer in this arena is documentation. Having a fraud response kit ready before you actually need it can make all the difference. Save your bank's fraud hotline numbers, memorize your account numbers, and understand your bank's specific fraud reporting procedures. Every minute counts when fraud strikes, and scrambling for this information can be costly. Keep meticulous records of all communications with your bank, noting dates, times, and the names of representatives you speak with. This documentation becomes invaluable if your case escalates to legal proceedings or regulatory complaints. And now, let's tackle some frequently asked questions. First, how quickly should you report suspected bank fraud? Ideally, you should report it as soon as you're aware. Within 2 business days is best to limit your liability to $50 under Regulation E. The Consumer Financial Protection Bureau emphasizes that reporting even within hours can drastically improve recovery chances. Remember, weekends and holidays don't pause the liability clock, so having a 24/7 reporting option is crucial. Next, what should you do after discovering bank fraud? Contact your bank's fraud department immediately. Use their dedicated hotline, not the general customer service. Request an immediate account freeze and get a fraud case number for tracking. File a report with your local law enforcement and keep a copy. This documentation is crucial for legal proceedings and insurance claims. It's also wise to place a fraud alert on your credit reports with all 3 major credit bureaus and file a complaint at identitytheft.gov to create an official record and recovery plan. Now, can you recover funds if you report fraud after 60 days? Although it's more challenging due to unlimited liability under Regulation E, it's not impossible. Your bank might still investigate according to their own policies, and there might be other avenues for recourse. There you have it. Timely reporting as your powerful ally in the fight against bank fraud. By understanding consumer liability, leveraging legal and procedural advantages, and staying vigilant, you can navigate this complex issue with confidence. Thank you for joining me today. Stay safe and vigilant, and until next time, take care.